This is Alan Bush with Archer Financial Services. Seeing stock index futures under a little pressure in the overnight trade. This after Moody's lowered the outlook for Germany's sovereign debt. We did see a brief recovery to a little bit higher on the day, but then some pressure again developing with the Richmond Fed Index coming in at a negative 17. Way off the guess of -1. We're inclined, though, to believe that we will see futures trading higher from these current lower levels. So I think we can see a move back to higher on the day. We continue to believe that the prospect of easier credit from the Fed will outweigh the negative influence of the weakening economic situation in the Eurozone. So from here, look for higher prices today. Probably a trend toward higher prices over the next few months. In the foreign currencies, the euro currency under pressure. Again, as we mentioned, the downgrade of the outlook for Germany's debt. Also, we did see Spain's 10-year sovereign debt increasing to a record at 7.62%. We're seeing Germany's yield increasing, and that could be a sign of some trouble. It could suggest that Germany might be a bit less interested in additional financial assistance to some of these other struggling Eurozone member nations if Germany's debt yields start to increase. Longer term, we continue to believe that the euro currency is headed lower. I think this is a trend that will likely last several months. I do believe that we will take out the 120 level, and that's a very critical support level for the euro currency. As far as the credit markets, some profit taking coming in, maybe some pressure linked to the supply this week. We do have $99 billion in Treasury debt to be auctioned this week, with $35 billion in two-year notes to be sold today. Longer term, though, I think we will see higher prices as the flight to quality situation continues as far as problems in the Eurozone, causing a flow of funds from there here to U.S. Treasury futures. Also, prospects of easier credit from the Fed, I think, will remain a long-term underlying supportive influence. So even though futures are a bit lower, currently I think we'll see a move back to at least unchanged on today. We continue to believe that the long-term trend is higher for Treasuries, and I think this is a trend that is likely to last for several months. And I do think that we will see another new round of contract highs across the board in the Treasury futures market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.